talking to Matt Williams, owner and founder of JTM Williams Capital Management, the first of many interviews we're going to be holding about current events in the market and general financial advice. Matt, how's it going?
Good, good. Just getting ready for a long Labor Day weekend. I'm
Well
sure
deserved.
yes, I'm sure like most people, our kids are going back to school. My son just started kindergarten here last week, so he's getting ready for his first Labor Day weekend as far as being off from school. So just looking forward to take it easy and definitely looking forward to the start of college football here this weekend. Obviously without turning this into a sports show, just very much looking forward to the return of Coach Rod to WVU and what that is going to entail here for this year. So,
Sounds good.
uh,
Nice. Yeah, likewise, my son, here in Florida started school back on August 4th. This is his first Labor Day weekend, so we're excited for it as well, as am I, to have Monday off, nice long weekend with the family. So
yep.
good stuff. Awesome. Well, let's get started with a couple questions. What is the biggest financial mistake that you see people make, and how can they avoid it?
I I think there's maybe a couple you could lump them into maybe the same thing, but I'll tell you here lately, people being afraid of debt. Sometimes people liquidating investment accounts to buy properties, being afraid to take out mortgages, not understanding in some cases that they have the ability to leverage their financial assets, to help them where, they can stretch out payments, use debt or their, financial accounts as ways to, help meet their financial goals. And, that I think is, at least from my experience, one of the bigger mistakes, people make. They don't realize, hey, if I, take money out of an IRA, taxes, penalties, doing that to buy, cars, things that are depreciating assets. So I think what I'd say here just recently, or even the last 10 years of myself doing this, it's what I would say is probably the biggest mistake I see people make.
Interesting you say that because my parents actually are they're in their 70s and they're very into paying things cash and not taking out mortgages or loans of any sort. So that's very applicable, and I see where you're coming from with that.
Yeah, everyone's different. I mean, again, if you've got a bunch of cash sitting around that's outside of retirement accounts and you just don't want to have debt, I mean, it's always on a case by case basis to be able to crunch the numbers. But I think that sometimes, if you have people that, their investments are, making mid single digits or low double digits, and then they're cashing that out, and again, in some cases, paying taxes and penalties to, buy something that again is either a depreciating asset or is just not going to, make that up. I mean, they I think ultimately end up harming themselves long term.
Makes sense. So if someone wanted to start building wealth today, what's the first step that they should take?
First step's just taking the first step. I think kind of looking at, you know, taking into account of what you have, looking at all the vehicles that are at your disposal, and just trying to determine, where your assets are treated the best. So some people that might just be, starting a IRA, starting a Roth IRA. Some people who start, work utilizing your 401k and at least, contributing up to the employer match. Like I said, just it's the first step is just taking the first step, and then just
Makes
building
sense.
from there. I was one of those weird individuals when I got out of college that I just said, you know what, I'm going to save half of my paycheck every single month, and I'm
Good
going to
for
invest it.
you.
And that ultimately ended up paying off and working to my benefit. Several it's several different periods here since 2007.
Well, very good for you, like I said. And well, I'd imagine that's something that kind of differs by age group, right?
Yes. Yeah. So, I mean, I have some people that, let's say, they really don't get started maybe until they're 50. And,
Right.
it's funny, when I was on a different, uh, you know, podcast here earlier this week, that was one thing I mentioned, or we were having a back and forth about just the catch ups, for 401ks, for, simple IRAs, solos, etc. And I think a lot of it, probably has to end up dealing with the IRS looks at, savings for people over 50 and say, okay, well, this is their peak earning year. Some of them are very behind. I think if you end up looking at median or average 401k balances or just general retirement funds, and it allows you to, really supercharge your retirement savings there later in life.
So, how has the financial landscape changed in the last few years, and what should investors focus on now, primarily?
There's a proliferation of so many different types of investment instruments now that did not exist, let's say when I started in the business here, 20 years ago. I always tell people the way I ended up, just becoming, such a proponent of exchange traded funds or ETFs was that my first job, on a trading desk was, someone came to me and said, listen, like we're getting a bunch of calls about ETFs. We need somebody on the desk that understands what these things are. And at the time there were maybe 200 and now there's thousands of them. And they're every type of strategy you could imagine exists now. Like there's an ETF for it. And I think that, you really need to understand that these things can track and get exposure to such, obscure asset classes, different strategies. And I really think you need to have somebody who understands how they function, to help guide you in, being able to utilize them and making sure you know what you own. Because like in some cases, you can have inverse products, leverage products, and I think for some cases for the retail community, they can be very dangerous if not not understood properly.
For those who might be new to the financial world, can you explain a little bit what an ETF is?
So most people started off with mutual funds where they were effectively just open-ended baskets of you know securities that were managed, obviously there were index funds. Like what an ETF is, it's effectively, think of it's a basket of stocks. So it's like a mutual fund, but it trades like a stock. So you have, whereas with like a mutual fund, you could only sell it at the end of the day at the net asset value. With ETFs, they trade throughout the day. So you can buy and sell them like a stock.
Got it.
And there's all different types. I mean, there's ones that just track major indexes, sectors, commodities, industry funds. As I mentioned, I mean, there's all different types of what one would consider, let's say, alternatives that could be like market neutral strategies, inverse funds, things that track volatility. I mean, there's just, there are even some ETF providers now that offer strategies that really only can be utilized in the past by hedge funds. So there's,
Okay.
as I mentioned, I mean, anything you think you could try to implement them for. I mean, they exist.
So you've been in the field for about 20 years. Can you explain a little bit about what role a financial advisor plays beyond just managing investments?
Well, so I started off, really as a trader and a portfolio manager of a hedge fund, and then got into, financial advising here a little bit, here about a little bit more than a decade ago. And I started off with just, I'm going to do the investments, and that's really what I focused on. I still think that's a very large component of it. But, really what I've learned is it's all the other stuff that's outside of that in a lot of cases is the biggest role we play. So there's a lot of times where, it's in looking at estate planning, insurance, risk mitigation, and then even getting down to, I've unfortunately had, some clients pass away recently, and there's all, helping, the surviving spouse, the family members, dealing with the executors, the estate, helping out, liaising with the accountants and just, helping them guide through that process. So, there's all kinds of things, just outside of the money management that I play a role in. And even to extent I find myself sometimes acting as a counselor to people, I mean, really help just life counseling, helping them making decisions, that I never thought would be as part of the job description.
Right.
I also, find myself sometimes making sure people go to the doctor, which I mean, again, is not my specialty, but telling them as far as, listen, health is wealth.
It is.
I
Very
encourage
true.
all my clients to go to, get their labs done, go see a doctor, make sure they know what's going on, because, obviously, I would like for them to continue being clients, for as
Right,
long as
right.
possible. So, and again, I'm someone who, like, I go and I get my numbers checked at least semi-annually, if not quarterly.
What?
But and what I normally see that in is, let's say, like in the insurance process, if someone's going and getting going through underwriting for insurance, I say, listen, like if you've never gone to the doctor before, you've never had a physical, I think this is a really important time where you can figure out like what's going on, and if there are any problems, going to a doctor and trying to get them fixed as soon as possible.
That's excellent that you bring your own, like, kinda wellness into the practice and your passion for fitness,
Yep.
that shows, and I definitely find myself often being a therapist to my clients as well, even though it's not in my job description, so
No.
I hear you on that one. So what's one timeless piece of advice, of financial advice, you believe everyone should follow?
Well, I'm going to give two. I'm going to give one that's more practical and one that I was just told that I just find funny. Uh,
Okay,
One, I think, just start from somewhere, start saving money as early as you can, because I do think people underestimate the whole concept of compounded interest, that if you just try to,
true.
save a little bit every month, and you'll be shocked after 10, 20, 30, 40 years what it ends up amounting to. Just small incremental improvements eventually end up adding up. As they say, big things have small beginnings. So I think that's what you have to start. We're going to start. And at least from from a previous life, one piece of financial advice everyone should follow: never be short crude oil futures going into a weekend. I that's I had someone much smarter than me tell me that once, and well, I've tried to
Makes
stick
sense.
to that. So,
I love it.
so.
All right, let's wrap up with any interesting observations from the market this past week.
So we had going into Labor Day weekend. So I'm from what I always gather, everyone, at least most of Wall Street's out at the Hamptons here the back half of August, and they'll start coming back here later next week. We just had Jackson Hole last Friday, where the head of the Fed, seems to be erring a little bit on the dovish side as far as cluing in that we're going to most likely be getting an interest rate cut here in September. We just had Nvidia earnings, last night. At least the market for now seems to be reacting favorable to them. Interesting thing, I'll just say that if you remember here, about a year ago, prior to when we got a 50 basis point cut in mid-September last year, I actually mentioned to you, I noticed that I was thinking about writing a blog
Yep,
about inflation break evens had started rising about a week or two before the interest rate cut, and that signaled the bottom in yields here for the last year, where the 10-year yield went from approximately 3.6, and right now it's a little bit, it's around 4.2. Same things happened here in the last week, where inflation break evens have started going higher, and I would just be curious again if the market has the same reaction, where even those short rates start going down, that if intermediate or long-term rates go up again and the curve steepens again. So that's my one, potential one interesting thing I've noticed here this week, and we'll just see if we get the same type of, market reaction in the fixed income markets as we did here, last September, when we got the, oversized 50 basis point cut there ahead of the election.
well, I guess time will tell. All right, well, thank you, Matt. I look forward to our next talk, and it's been a pleasure.
Awesome. Have a great weekend.
You as well.